Maybe I am wrong, and maybe I'm not wrong. Reality sometimes can be an absolute bitch that can hit you when you least expect it. In this video, I'm going to be jumping down into the data, and I'm going to read this data as I see it. Now, it's entirely up to you as to whether you choose to believe that this data is accurate, and you believe that this data is giving you the kind of the idea of where things are actually likely to go. And it's entirely up to you and to make your own financial decisions, because I'm not a financial advisor. I cannot give you financial advice. All I can do is give you my thoughts and opinions on the data as I see it. Now, I've been called lots of different names under the sun yesterday. Lots of people reveling in the idea that things have moved up quite nicely, and rightfully so. It's great to see prices in the green. However, I do want to kind of give the grounded approach, like I always do, where the data is actually not giving you that positive outlook that you also desire and crave. So as I get into this video, if you find it useful and informative, smash the like button. I appreciate that. If you're new to the channel and you like this kind of grounded content, then why not consider subscribing? And don't forget to join us down in Discord, and we can continue conversations down there. Link in the description below. Let's make a start with this one, okay? Now, this is a chart. We're going to come into the charts in a moment. There's actually a lot of things going on that we need to talk about at a bigger level. Okay, so yesterday we saw price move up quite nicely, right? We saw this here. Now, a lot of people want to kind of think of this as a start of a bull market, right? Everything is super bullish, right? SVB Bank being bailed out, for example. We have HSBC buying the UK arm of it, etc., etc. And then a lot of people want to kind of really think confidently about that. However, I don't think we want to reflect too positively too soon. And there's also lots to talk about, the Fed making a pivot and things. And it was only a week ago that they were saying categorically that they were going to increase those rates, and now here we are 1 week later and they're doing a U-turn on us, and maybe next week they'll do another U-turn. We don't know, right? Ultimately, there's a lot of things that are going on that we need to be aware of, and we need to use our brains as to think whether or not it's logical for a bull market to occur. And in order for a bull market to occur, we need to see that demand outpaces that of the supply. Okay, that is the very definition of a bull market. And we need to see in the data demand outpacing the supply. It's very, very simple. Do we see that or do we not see that? Okay, that's number one. And of course, we need to obviously see money. We need to have money and surplus money around the world in lots of different countries that can be invested in cryptocurrency. Okay, that comes from all levels, retail, but more importantly, institutional level, okay? And that's really where things start to get a little bit unstuck with the idea of a bull market when you start thinking about institutional investors trying to put money into cryptocurrency. I think there's pockets of it, but let's face it, the majority of institutional investors are not investing in cryptocurrency right now. This is also very clear from the data, and we're going to get into that in a moment. Now, we really want to kind of illustrate that there was a lot of volume coming through here yesterday. I say a lot, it was reasonable. And we saw price move up, but we also saw the DXY coming down. Now, this is not an unusual thing. If we think about why the DXY would go down, it's because no one has faith in the dollar, right? We see this not only with the banks collapsing, and if you can't get to the bank to withdraw your cash, then you're going to want to go ahead and convert that cash into something else. You're going to do bank transfers, and you're going to transfer it into whatever else you can, whether that's a metal such as gold, silver, platinum, all the way through to different stocks if you really wanted to go maybe risky, or maybe even BTC, for example. Now, this is not an unusual thing that we see here. You can see people in forex trading, if they had dollars, they were converting that into Japanese yen, the euro, pound sterling, for example, many different currencies that they were just selling their USD in favor of other currencies. And then, of course, we even see stable coins compounding this issue, and Binance themselves actually converted $1 billion worth of BUSD into Bitcoin, Ether, and BNB, and a few other tokens as well. So we start thinking about the amount of volume that was coming through for Bitcoin. Well, $1 billion of that was BUSD and Binance alone. So is this in fact just Binance spurring on the market and pushing it in a direction just because they wanted to get rid of their BUSD in favor of, other cryptocurrency assets? There's a lot of things to kind of think about here. But of course, things don't get any better. Now, as I was saying, it's great to be able to see price going up in green. However, is that sustainable, which is the bigger question? Is the demand outpacing the supply? And is it a sustainable pump to the upside? Or is this actually all just spurred on through fear, FOMO, etc.? Now, we have to consider that there has to be a substantial amount of money in order to push the needle to the upside, right? Not only institutional investors, but also retail investors. And we have the UK's unemployment data came out today, and we can see that job vacancies are on the decrease, right? So this is the 8th time in a row that people and companies just simply are not employing. Okay, so we can see that that's occurring. Now, the unemployment rate is pretty flat at 3.7. That hasn't changed in the UK, but the job rates continue to decline, basically meaning that there's fewer jobs now out there than there were 8 months ago, for example, right? And although the unemployment rate hasn't yet massively been impacted by this, my expectations are that not only are new jobs not being created, existing jobs will start to get cut. And that's really where the unemployment rate starts to increase. Okay, so not only do we see Binance, selling off their BUSD stablecoins in favor of Bitcoin, Ether, BNB, and a few others, we also see that there's not that many new jobs coming into existence for the UK sector, and I imagine this is also going to be in many other countries as well. We also see unemployment rate either static or growing in countries, so we know that there's few and few people actually in work and employed, and this actually has an impact on how much surplus cash people have to then deploy into speculative investments such as cryptocurrency. And then, of course, we can take a look at and think, okay, well, if it's Binance that's driving this volume, who's going to be taking advantage of the price being slightly higher? Well, it's going to be market makers, whales, and big, large institutional players, right? And then it's when we come into our Discord server, we take a look at the whale alerts, and we can start to see some interesting things occurring. Okay, so we can see that some USDT was transferred. We can see here that 4,999 Bitcoin was transferred from an unknown wallet to Binance. We can see that 999 Bitcoin was transferred from an unknown wallet to Binance. We can see 11,125 Bitcoin was transferred from unknown wallet to Binance. And you kind of get the idea here. We have 26,636 ETH transferred from an unknown wallet to Coinbase. We have over here as well, 537,000 Solana moved from an unknown wallet to Coinbase. You can see that there's a lot of whales moving to exchanges. Now, this is something that we should be talking about and we should be aware of, because it's not going to give you that bullish narrative that everyone so desires. Okay, we want to be bullish, we want a bull market, but let's be realistic about it. How on earth is there going to be a bull market? So let's go ahead and take a look at the on-chain data. Does the on-chain data help us support this bullish market that everyone so desires so madly? And up here, well, fuck me, no, of course not. Here we can see 2.0858 million Bitcoin going onto the exchanges and 2.0740 million coming off the exchanges. We went from a negative number, I think it was negative 16,000 Bitcoin, to now positive 11,000 Bitcoin on exchanges. Well, fuck me, that's definitely supply outpacing the fucking demand. So that right there just tells me straight off the bat that this pump to the upside is not natural. Okay, you cannot just flip from being so bullish, potentially bullish anyway, with 16,000 Bitcoin coming off the exchanges to shooting up to 11,000 on exchanges. Right, that right there tells us within one day, although price was moving up, more Bitcoin was going onto the exchanges. It was an unnatural move to the upside, driven from fear around the dollar, banking within the US, DXY dropping down, and essentially Binance coming out of their stablecoins. And so here we can see a significant surge to the upside. Not only can we see it within these flat numbers at the top here, but we can also see it on the line graph at the bottom here with this huge uptick with Bitcoin now going onto the exchanges. You can also see it right here, whereas we were neutral, we've now gone back up again. So when we take a look at this on the line graph, it looks like this. And we can see right up here that we had 83,000 Bitcoin going onto the exchanges yesterday, with 59,000 Bitcoin coming off the exchanges. This makes us wonder, who is buying and who is selling? And well, same old story, unfortunately. We have retail investors that are accumulating. So here we have Bitcoin dust. We can see these wallets increasing. This is basically anyone who has over 0.01 Bitcoin. We have shrimps. Here we can see, I say shrimps, but I called it shrimps, but this is retail wallets. Krill over 0.1 Bitcoin, shrimps over 1 Bitcoin, and dolphins over 10 Bitcoin. You can see there's a couple of flat moments here for Krill, and a little bit of a dip down, tiny little dip ready for dolphins, but still going up on the shrimp side of things. From the larger institutional whale side of things, we have our traders accumulating. they're seeing the same opportunity that they saw previously with the DXY being affected and taking advantage of that. Ultimately, though, these wallets are still significantly lower than they were. And likewise, we can see that the whale wallets, they're still on their move to the downside. Nothing has changed there. And the same with our Kraken-sized wallets, all right? So we can see that essentially big money is not backing this move to the upside. It is only small, dumb retail money that is essentially pushing this price to the upside. Now, we can try to, look at this as bullishly as we possibly can. There's opportunity in the fact that the dollar is starting to destabilize, and, unfortunately, most of these pairs are with dollar, right? And therefore, we can see that things are starting to push back up. You need more dollars to buy your cryptocurrencies, right? Now, essentially, if we take a look at the 365-day view for whales, this is essentially what it looks like. Okay, we cannot get too carried away thinking that we're in a bullish market when these guys simply haven't entered into the space. Okay, these guys are the ones that drive the price to those heights that everyone is looking for, right? They're looking for $100,000 Bitcoin, for example, and yet these are the ones that are going to drive it there. Without the money from institutional investors and retailers that are simply losing their jobs are one, but not being able to find new work because new jobs are not being created. It just, to me, just feels absolutely foolish to think that you can possibly think that we could be going to $100,000 and higher. I just don't think that's something that we should be, thinking about. All we're really doing here is seeing that retail investors are propping up the market, and you'll see market makers taking advantage of that. So we can't trick ourselves into thinking things are bullish when we simply just do not have the underlying data to support it. Okay, so when we start thinking about the price action on the charts, we have to take all of these things into consideration. Okay, we take into consideration the fact that the inflows are significantly outpacing that of the outflows. Essentially, there is more supply than there is demand. We can see that the dollar is weakening, the banking sector is weakening. We can have bailouts from the governments, but that's only going to kick the can down the road. Essentially, at some point, this is going to have to implode on everybody, okay? There's no other scenario here. You cannot think about a bullish market when, if you print more money, if the United States print more money to kind of, deal with the fact that they've screwed over the banks by these interest rate hikes, then all they're going to do is increase inflation, which is then going to devalue the dollar even further and so forth. So that's not really something that's likely to occur. So instead, what they're going to have to do, in my opinion, is either keep the interest rates where they are temporarily, monitor the situation, but it's still, that's going to increase the inflation. So a hike is inevitable. You've got to bear in mind that what the Fed have done is increase those rates, increase the interest rates, right? And they have these interest rate hikes. In doing this, they have devalued bonds, and in devaluing the bonds, they've basically damaged the banking sector. But what we have to kind of consider here is this is exactly what they wanted to do in the first place. This is their plan working. It's not the Fed's fault that banks didn't have good risk management in terms of where they have their assets, right? Anyone with, I guess they should have known this, right? The banks who had this level of exposure should have known. Okay, now obviously you can argue that the governments are double dipping in a roundabout way because of quantitative easing and all that kind of stuff. And the government basically screwed over the banks by selling them the bonds in the first place. I kind of get it. We have to kind of consider, though, that this is exactly what the Fed were talking about and was always on the cards and always going to happen as a result of those interest rate hikes. Okay, now you can argue, is it deliberate? Is it fully deliberate? Do they want to kind of see this? I don't know. I do know that they expect many people to lose their jobs, and I do expect that to still occur. And as such, I do expect markets to get a lot more violent and a lot more emotional overall. And we've seen a lot of emotions because price moved up yesterday, and some people are really giddy with themselves, and other people are really really feeling the pain of it. Ultimately, I don't really mind. I want it to be a bull market, but I don't think we are in a bull market. Do I want it to go down? I'm not overly that fast. I want it to be at a nice level where I think most retail investors can take advantage of it, and we can start seeing institutional investors coming in, and inflation isn't a thing. But, we don't live in an ideal world. We live in a world where, unfortunately, things do not always go according to plan. And as we saw yesterday with the analysis that we did, so if we come over to yesterday and come down into my hourly chart, we were talking about this micro movement coming up. We went up a little bit further than expected. I was expecting around 23.1, and we're up here We got to, I think, where is that wick right there? 24,820 to the penny. Okay, so yes, it pushed up a little bit further than expected. Again, it still falls within my structure here overall, so I'm not terribly too concerned about this move here at the moment. Anything above 25,250, then I'm going to have to redraw this. But, you know, this isn't the end of the world by moving up a fraction further than I was expecting it to. Ultimately, one of the bigger key takeaways here over everything that has occurred is the stochastic RSIs. Let me bring this up. Okay, so our stochastic RSIs are incredibly overbought now. We can see this on the daily, 8-hour, 4-hour. Hell, you can even go to the 12-hour. You can go to the 16-hour. You can go to the 20-hour chart, and all of them are overbought. Even the weekly is propping back up here in this overbought range. What does this tell us? It tells us that things are about to get very, very real for many of those bullish people out there who are going long on the market. Ultimately, across these macro timeframes, a big motherfucking drop is coming. And it's one of those things that we have to kind of acknowledge. We can't just ignore it. We can't bury our heads in the sand. It's great to be bullish, but unfortunately, we've been doing the very similar scenario that we've always done. Higher highs and higher lows, and unfortunately, they have a tendency to break to the downside. Unfortunately, as well, we still stay valid to our lows. And these, unless we go higher than 25,250, we are still very much looking at $16,000 to $10,000. Personally, I prefer the $14,000 range, but ultimately it is what it is. We are looking at a bearish scenario. Not only is the supply outpacing the demand, it is being manipulated at the top level. We know that it's really just DXY driven and fear around stable coins, fear around dollars, fear around banking, and ultimately we are in heavily overbought, exhausted levels when it comes to not only the stochastic RSI, but we're also getting there on the RSI. Now, from a smart money concepts, we should acknowledge we have printed a bullish change of characterization. Okay, this is at a pretty decent level as well. Okay, so we were bearish, 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 and now we've changed to bullish. It's going to be interesting to see whether this holds, considering our stochastic RSIs are telling us that the market is exhausting itself to the upside. So ultimately, we have a lot of fair value gaps, lots of gaps that are left behind in this move to the upside. So expectation is to move down overall. Now, if I didn't bring this to our daily level, we are still bearish on the daily. Okay, so we never changed our change of characterization to the upside here on the daily time frame. We're bearish, we confirmed bearish, we've never changed to bullish. Okay, so we know that our macro levels are still looking at the moves to the downside. So we can't get ourselves too carried away there either. Now, if I go ahead and bring the volume or take the volume off here and bring in our RSI, a stochastic RSI, you can also see here how we're fastly moving up into that overbought area. I still think there's potential moves for a fraction higher. Again, I'm not terribly too concerned over this recent move because the macro still very much remains true. There is selling pressure occurring at the institutional level, the smart money level, and there is only really buying occurring at the small retail level, and that is a recipe for disaster. Okay, retailers are exit liquidity for whales. This is very apparent. Not only is it apparent from the on-chain metrics, but it is also apparent from all the transfers that were going on with basically Bitcoin, Ethereum, and other cryptocurrencies moving from wallets to exchanges. Brace yourselves. I think things are about to get very real very, very fast. I'm going to leave this video right there. You know what to do if you found it useful and informative. Hit that like button. If you're new to the channel, subscribe. Stay up to date with everything. Join us down in Discord, guys. I don't think you'll be disappointed by what you find down there. And I'll catch you all in the next one.